Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. As you can see, the portfolio is doing all right. So last couple of weeks has been a good couple of weeks. We have had a terrible 2022, but things have improved the last 2 weeks. Now, I'm not sure if that's going to continue, and we're going to talk about that in a second. We're going to talk about generally what's happening in the markets the next couple of weeks and some of the things that you need to look out for. But as you can see right now, the portfolio is £56,000. As you can see, the return is £4,480, and that's about 8.5% total returns, which is quite nice. I mean, just the ungained profits. So that's not obviously realized until I sell everything. If I was to sell right now, I will make £4,480 in basically sales in terms of capital and appreciation, and that is nice. Okay, but at the same time, I'm not just worried about what the market is doing right now. I'm thinking about next 5 to 10 years. So that's why I'm buying quality companies, and that's something that we're going to do today. Okay, today we're going to look at a company that is really undervalued at the moment, and that could potentially be a good addition to a portfolio. I'm not saying you should buy this. Okay, I'm saying I'm not a financial advisor. You just need to do your research. All the videos that I'm doing here is just for entertainment purposes and just to kind of give you some information of the things that I am doing and things that I'm seeing in the markets. Okay, so it's just through my eyes, but you just need to make sure you are doing your own research as well. Let's get started and talk about the markets generally, right? So the next week, okay, so the week beginning the 25th, we are expecting a lot of the earnings reports to come through from the big companies. We're going to talk about that in a second. But also the Fed is basically will be meeting and possibly will be raising the interest rate from where it is right now to potentially add another 0.75% this Wednesday coming. That will mean that the interest rate will be 2.25 to 2.5%. Now, that hike itself, it's not just a major issue. People are expecting that. It's what they say afterwards. Are they expecting the next meeting? Are they going to increase it even more? Okay, and that is the bit that the markets needs to know. I think the markets is already kind of anticipating that 0.75 will be added, but is what happens after that that we are worried about. Oh, by the way, apologies if my mic is not great because I'm not at home. I'm on holiday. Again, I'm actually doing these videos while I'm on holiday. So I wish you appreciate that, and I wish you can just give the videos a like. If you haven't subscribed to the channel yet, please do that. Okay, press that like button as well. It helps the videos a lot, I'll be honest with you. Okay, right, let's have a look at the earnings then. So on Monday morning, the Monday the 25th, we're expecting in the morning before the market is open, there are a couple of companies that are reporting, but none of the big companies out there. Right, NXP is reporting after the market closes. Whirlpool is also reporting. Logitech is reporting after that, but the big ones is on Tuesday. Right, so Tuesday morning before the market opens, Coca-Cola is reporting, Raytheon Technologies, 3M, McDonald's, GM is reporting, UPS is reporting, GE is reporting, and Unilever. So before the market opens, so that's Tuesday morning. After the market closes on Tuesday, okay, what's going to happen? Microsoft, Alphabet or Google, for example, Visa, Texas Instrument, Mondelez and Chipotle and Strikers and Canadian National Railways, and all of these companies are reporting. Now, the two big ones are Microsoft and Alphabet, to a certain extent Visa. Now, these two companies, if they report, especially Alphabet, because of what happened with Snapchat a couple of days ago, where it went down 30-40% or whatever it was, if they come out and just say more or less same thing as what Snapchat said in terms of their revenue going down because of the advertisement is not basically as much as they expected, then that could potentially crash the markets. The reason I say that is because Microsoft, Alphabet, Apple and Amazon are big basically section of the S&P 500 or the total markets, and if they don't report great earnings reports and they beat everything and their outlook is good, then we are in trouble. Microsoft has already came out about a couple of months ago and said because of the dollar basically going up, the FX impact is actually having huge impact in their revenue, and they've already kind of gave us a warning. So we will see how much that impacted the overall earnings. So we will see what's going to happen. So These companies are reporting on Tuesday and after the market's close. So something to keep an eye on. Okay, I'm not saying you should be buying them at that point. Okay, so the markets could still go down by the time we get to Wednesday and the Fed comes out. But Wednesday, you've got couple of companies. You've got like T-Mobile, you've got Boeing, you've got ADP, West Management, and Spotify's and Shopify's and all of these companies. But then Monday afternoon, after the markets close, okay, you've got Qualcomm reporting, you've got Lam Research and Etsy's and so on, and Meta, Facebook. So again, if Facebook comes out and again says the similar sort of to what Snap and Alphabet said, then that's going to crash the markets too, because Alphabet is a huge section of the market, overall market, okay. Thursday, we got companies like MasterCard, you've got Pfizer, you've got Shell, Thermo Fisher's, you've got Merck as well reporting, you've got Honeywell. And then Thursday afternoon is where another big one happens, where Apple and Amazon are reporting. These two companies are really huge in terms of, even Amazon, I think it's like 26% of the consumer discretionary sector. So that itself can crash the whole sector, okay, if they don't do well. And they've already, haven't been doing well in the last few weeks. Then you got Intel, you got KLA. So you got a lot of great companies reporting. And finally on Friday, we got the oil companies. We got Procter & Gamble reporting. We got AstraZeneca reporting, Colgate reporting, AbbVie. So next week is really important. There's like 10 different companies that I own in my portfolio, if not more, that are reporting just next week. Top of that, you got the Fed situation going on. So there's a lot going on in the market. So keep an eye on that. And again, sometimes this is just a noise. I'm really interested in the earnings side of it. The earnings are not just a noise. It's really important. Why? Because that's what tells us whether the companies that we're investing in are heading the right directions. Are they doing the right things? Okay. Basically, is the stock gonna crash? And if it crashes, are you going to buy more? Because in the long run, these companies will be around and they are going to make you money in the long run. What if they come out and say, okay, we're no longer going to make as much as we did in the last few years? Are you going to sell? Are you going to keep on? So those are the decisions that you need to make based on what you see on those earnings report. But remember, one quarter doesn't determine the whole company's outlook. You have to look at the whole year. So just think about it, look at these companies, see if if you want to add to it, if you want to sell it. Those are your decisions, but you just have to look out for these earnings reports, because they tell us a lot. To be honest with you, every time a company reports, especially the big ones, I always read through it just to make sure everything is okay and head in the right directions. So let's talk about the company that we are here for today, right? And that is Applied Materials. This is one of the semiconductor companies, and as you can see, it's down 36% this year. When you look at the S&P 500, it's only 17% down, but this is down 36%. Okay, so let's have a look in terms of their financials and see if this company is actually a buy. Like I said, this is a company called Applied Materials. They're in the technology sector, currently trading $101 per share, EPS of almost $7.5, and next year is going to grow about $1 and the EPS. Okay, the market cap is $88 billion. It has a wide economic moat and it has a beta that's above 1, which means basically it's quite volatile. So when the markets go up 5%, they'll go up 5 and more. When the market's down, they will basically go down a lot. So you lose out on the upwards, but if a company's beta is lower than 1, then it doesn't track the overall market. Okay, so 1 is what we're targeting for. Above 1 is just a little bit too volatile. Okay, PE just very, very low in comparison to the overall sector. So the sector right now, the technology sector, we're looking at about 25 PE. Right now is about 14 when you look at this company. Price to free cash flow, we're looking about just 20. So that is kind of in line. And dividend yield of just 1%, 5-year growth rate about 19%. Dividend growth is streak of 16 years. Now, when I say 5-year growth rate of 19%, 19% is a lot for the last 5 years. Okay, not many companies do this. Even Microsoft hasn't done this. I think Microsoft is like 9 or 10. So this is basically means this company is growing their dividends, and if you are a dividend growth investor, okay, this is probably one of the companies to look at. Payout ratio only 13%, which means they have room to improve or room to increase that dividend. Dividend safety is 86%, so that's definitely safe. Free cash flow, they've got $5 billion in the bank, over $5 billion. Okay, 5-year revenue growth, they're looking about 17%, which is nice. 5-year EPS growth, we're looking about 36%, which is really nice. Profit margin 27%, operating margins 31%, return on equity 56%, and then last total return in the last 10 years, we're looking about 26%. Current ratio, we're looking above. So this tells us the debt levels of this company. So in the next 12 months, can this company pay off their debt? If it's above 1, that means absolutely yes. If it's below 1, that means they might be in trouble. So the next 12 months, this company should be able to pay their debt twice, okay? Growth estimates for the next 5 years, we're expecting about 14%, which is very high, okay? But normally, tech companies, that's what we expect, 10 or more. Simply Wall Street saying 44% undervalued at the moment. Their price target is, the fair value is $186 per share. Morningstar 28% discounted right now. Fair value 142. Tip ranks 37%. Upside 139. Yahoo Finance exactly the same, and according to tip ranks is actually strong buy. So again, there you go. So this company seems really undervalued at the moment. And when you look at these financial metrics, right? And again, remember, none of these is going to tell us what's going to happen in the future, right? It just tells us where the company has been. And if we take into consideration some of these things and kind of give ourselves a projection, based on that projection, this is what the analysts basically are telling us. This is not my own evaluations. This is basically what the analysts have said, okay? So according to these 4 different companies, each one of these have done different analysis, okay? Some of them are just looking at 12 months price target, okay? So these 2 are looking at 12 month price target, and these 2 are looking for intrinsic values, meaning basically what the business is worth right now. So they are saying it's discounted at the moment. So it's a great company in the right sector, and as you know, there have been shortage of basically when it comes to chips. And obviously, this company provides the manufacturing equipment that's needed in order to create these microchips and so on. So again, that's the company that we want to talk about. Just quickly show you a couple of more things about this company. So as I always look, shares outstanding, we're looking at right now is declining, which is really nice. Total sales is heading the right directions, okay? And finally, return on equity, as you can see, is actually going up in the right directions and so on. So again, is one of those companies that not many people are talking about it right now. But remember, if the markets stabilize and go back to the way things were before all of this madness has happened, and these companies go back to their intrinsic values, okay, you'll be kicking yourself because you're going to think, okay, why have I not invested? So this is why I hate time in the market. So what do? Week in, week out, I just buy basically stocks. Okay, I don't care whether it's up week or down week. I will just add minimum of £250 every single week. Okay, and that's what I've been doing, and that's what's helped me a lot so far. Okay, and I'm still doing that every single week, and I will be sharing more videos in the next couple of days. I have been on holiday, so I haven't actually done a lot of research, but I will be doing that next couple of days. I've got another video I think I might release today or tomorrow about another great company. If you enjoy this kind of content and you are basically enjoying the videos here, like, remember, this is just for entertainment purposes, and I'm sharing my journey, what I've found out, what's going on in the markets. If you're into that kind of thing, please subscribe to the channel. Let me know if you have any questions. Have a wonderful day. Assalamu Alaikum.